critical minerals. And we have a terrific panel that will be with me shortly. But I'm going to start off with just a little bit of a broader context of what about the CEFC, where I hail from, John. Hello. Ian Learmonth is my name, and I'm the Chief Executive of the Clean Energy Finance Corporation. And the CEFC, for those of you who don't know us, is Australia's Green Bank. And we were established some 10 years ago or 12 years ago now, with 10 billion Australian dollars to invest essentially in the clean energy transition. And over that period of time, we've invested in something like $12 billion worth of transactions, and we have crowded in about $2.50 for every dollar that we have put out the door. So in aggregate, we've invested in something like $50 billion of clean energy projects. And they've been wind, solar, storage, the built environment, infrastructure, transport, right across the economy. The CFC's capital is about helping decarbonise the Australian economy. As I say, we work across many sectors, if not most sectors. And we aim to make a return, as we have for taxpayers. So since inception, the return of the CFC's portfolios is approximately, it's about the 5-year government bond rate plus about 2.5%. So it's really been quite successful financially. We've also the transactions that we've invested in over their life are going to displace something like 200 million tonnes of carbon. So it really has been a very significant journey, if you like, for the CFC over the last 10 or so years. We fill gaps in the marketplace. We take risks that others don't. We're both a financier and an investor. We would provide concessional finance in some cases, below market finance, if we think that will drive some kind of outcome. So in terms of the mining sector and resources, obviously mining is a huge sector and deep in Australia's DNA. And look, a great deal of our economic strength has come from mining in the 19th and 20th centuries. And I think we're hopeful of having a large share of the minerals globally to power the 21st century in a different way. And as we pursue ambitious new emissions reductions targets, I think Australia will see a significant supply of these critical minerals, but we want to see them extracted and processed sustainably, of course, and ethically. And we've been involved, I suppose, in our earlier days in the lithium sector in Australia. We were one of the first financiers of Pilbara Minerals through a project bond issue that they did in about 2017. More recently, we invested or have participated in a financing for Liontown, another one of the Australian big lithium miners in WA in the Kathleen Valley. We've also invested in a range of technologies in this critical mineral space. People like the West Australian company Novalith, which is looking at, new ways of extracting lithium with low emissions and being highly efficient. So we've got we are facing a once-in-a-generation economic and industrial shift, and and that rapid decarbonisation is going to require has created a vast demand for minerals, particularly driving EVs, of course, lithium batteries in EVs, the production of wind turbines, solar panels and other technologies. And there's an expectation that those minerals are expected, or the need for those minerals is expected to jump some 5-fold by 2050. So a really significant increase. And I think, according to Bloomberg New Energy Finance, some $10 trillion dash from now to 2050. So 3 years ago, we were facing really a supply crunch, particularly around lithium, and the IEA did warn of big uptick in demand. And now, of course, we are seeing that. The IEA tells us that the market for these critical minerals has doubled in size, and latest estimates is worth something like $320 billion US. There's no shortage of these raw materials, according to the Energy Transition Commission, needed to support this global transition. But without, I guess, action to improve the materials' efficiency, increase recycling, and increase mine supply, there could, of course, be gaps in supply, and particularly in key materials: lithium, nickel, graphite, cobalt, and copper. So apart from the supply challenges, which we'll talk a bit further about this afternoon, we've also kind of got this existential crisis about decarbonising, or the urgent need for minerals to help us decarbonising while avoiding increasing emissions through unsustainable mining practices. So I think that's a very significant issue in terms of balancing what we need and how it's undertaken. Geopolitical concerns, measures like the Inflation Reduction Act and the Carbon Border Adjustment Mechanism will also have a very significant impact on the extraction of critical minerals over the coming decade. So we're very much looking forward to sharing these perspectives with you this afternoon. I've got a terrific panel, which I'm going to call up onto the stage. We have Nick Goll, who is the Global Head of Energy Transition at Macquarie, Mary Stewart, the CEO of Australia's Energetics, and Nicholas Gustafsson, who's the Head of Public Policy and Regulatory Affairs at Volvo Group. So I'll welcome my panel up here on stage. Thank you. Does that work? Thank you. Yeah, I think what we would like to start with is probably hearing a little bit about the private sector interest in critical minerals. What the private sector is looking for. I mean, we're obviously a public sector green bank, and we're looking to sort of crowd in where all the big licks of capital are, of course, and that is in the private sector. So I thought maybe I might ask Nick here from Macquarie just to tell us a little bit about the sort of what Macquarie's doing in this space. And I know it's broader than just the extraction of critical minerals and mining, but also much kind of further downstream. Where activity lies, what the private sector is looking for, and how Macquarie is playing in this sector.
Sure, thanks, Ian. So just as a bit of background, I look after Macquarie's equity investments in energy transition, which includes a lot of the downstream uses of critical minerals around batteries and EV charging. But as an organisation, we obviously have a very strong fundamentals in the mining sector in Australia on both the financing as well as the investment side. If you look at the tailwinds around the critical mineral sector, there's obviously a strong focus on the upstream side of it, which is the extraction side of it, which Australia plays a huge component of the world market share in it. I think, as you indicated, there's an increasing focus from investors to continue to invest on the upstream side as supply needs to catch up with the projected demand through 2030, 2040 and 2050, which, as you indicated, is expected to go up by north of 5 times. And so I think if you look at the investment trends we're seeing on the private sector side, it is still traditional investors in commodities who are investing in these projects, because at the end of the day, most of these projects are commodity-linked projects where price volatility is underlying in the investment. And so what we're seeing is, for example, with the recent decrease in lithium prices, there hasn't been as much activity in kind of the development of mines as you would have expected, but we do expect supply and demand to balance out and to see increased focus going forward. If you look at who's actually investing, it's really the large corporate strategics. Some select long-only funds, and I think the key thing we're seeing in private markets at the moment is an increase in M&A activity in these critical mineral sectors, as some of the bigger players are recognising that to develop these upstream assets takes significant time, and so consolidation is something we expect to see continue to happen over the coming, call it, months and years.
Thanks, Nick. And just in terms of the time of bringing these mines to kind of fruition, if you like, sort of the time frames that we're kind of seeing around markets for that?
So if you have a look at the time frame for development of these assets, the traditional kind of logic around mining sector is that from effectively a find to actually production tends to take somewhere between 5 to 10 years. So if you average that at 7 years, that is largely driven partly by the fundamentals of needing to delineate the resource, but a lot of it is government processes, and we shouldn't underestimate that there is still the need for those government processes to happen, but for the kind of pace of acceleration that we need in the energy transition, you really need to look at reducing that 5 to 10 years to something shorter. And that's what's driving a lot of the M&A and consolidation, as a lot of the strategics recognise that in order to increase their production, they have to acquire assets at the same time that they're looking to develop assets in the medium term.
Yep, thank you. So just moving now to, one of the big themes with the critical mineral sector is the sustainability of mining, and the kind of origin or the guarantee of origin issue that's coming up, and whether what regulation is doing in that sector. It'd be interesting to hear from you, Mary, your thoughts on that, the sort of work that you're doing, and some of those issues that are increasingly playing out in the resources sector.
Thank you. So just to give you an indication of the type of clients that we're working with, we're working with companies who are trying to understand their transition and physical risk and manage that risk through to 2050. So when miners come to us, they're trying to understand what the transition risk to their assets is moving forward. And some of them are looking at that in the context of what is the materials, what is the carbon intensity of my product, and how do I prove that? What is the data set that the buy side is looking for that will enable me to demonstrate the carbon credentials of what I'm selling, and increasingly modern day slavery, making sure that there's not conflict in my supply chain. How do I demonstrate to the market that materials coming out of Australia have these assets? And what value does the market place on these? Because it's not cheap, the data collection is not trivial, and there needs to be a reason to get this information set together. And we've seen an extraordinary uplift in the number of clients who are asking us to do these assessments, but they're not sure which they should do. Should they do a life cycle assessment, an environmental product declaration? Should they try and aim for a guarantee of origin for Australian lithium? So they're building these quite comprehensive data sets. They're finding stuff that they didn't know, which is good. They're working out the opportunity and the risk, but they're not quite sure what to do with it and why. And mostly the issue is that there is no differentiation in the market. They're spending quite a lot of money to pull these data sets together, and the market isn't really willing to pay for it. They want that information about what the materials they buy, but they don't want to pay more to get it. There's a whole lot more I could say about risk, sovereign risk, country risk, where your material, where your resource is found. Australia has very low sovereign risk. We're easy to mine. Yes, our energy is expensive, but we've got a skilled workforce. It might take 7 years to get a mine site through, but at least you know that you retain the right to mine in spite of regime change, for example. So while mining in Australia is more expensive, risk is lower, which means that in the long run, in a 5 or 7 year life of mine, you probably come out on top relative to, say, trying to mine in the DRC or in Zimbabwe. So there are different risk profiles that you look at. And Australia, with expensive resources, does still measure up in the rest of the world.
Thank you. We might switch now to the demand side, and we obviously have the pleasure of Nicholas here from Volvo. Nicholas, it'd be great to hear, firstly, how Volvo thinks about its supply chain, particularly with all these sorts of issues: social license, modern slavery, emissions, water, everything that's sort of potentially in your supply chain. I know you have I think you said 50,000 tier one suppliers, extraordinary. So good to hear about how you're thinking about it, and also the thought of, are you kind of going downstream, you're starting to think about securing supply in some of these sectors. So over to you.
Yeah, thank you, Ian. Hello, everyone. Yes, I'm Nicholas from Volvo Group. Then, just to start with, I usually start the panels by saying we are not Volvo Cars. We divested the cars business 25 years ago, but we still share the same brand name. But so I'm talking commercial vehicles, trucks and buses, and construction equipment and marine applications. So, been in Australia for 50 years now, producing vehicles, some 70,000 trucks already. Volvo trucks, obviously, but also Mack trucks, which is one of our brands. Yeah, this challenge is enormous now, of course, with this transition. I told Ian, I've been almost 30 years in the company, and in a truck OEM company, you sort of get used to incremental changes every year, a little bit more fuel efficiency, changing this, changing that. But since the last 5 years or so, we're into a complete revolutionary change of our company, which is really interesting and challenging, obviously. So, and that is this transition then from diesel, fossil fuels, to renewables and completely new technologies, which is happening as we speak. So we are in full production of battery electric trucks, and I'm not talking only city distribution and stuff. I'm talking heavy-duty trucks, at least on European aspects here. I know Australian trucks, we are still a bit away from those animals, but we are the European 44-ton you can get right now from Volvo, fully electric. So we go three parallel technologies. There is no silver bullet when you're talking commercial heavy-duty vehicles. It will not only be battery electric, it will also be fuel cell electric vehicles, fueled then with hydrogen, green hydrogen. And actually we will still keep the internal combustion engine also for some applications out there. Obviously not fueled by diesel then, but with the renewables and even green hydrogen also for the internal combustion engine. So we have a menu of technologies, and we are going really hard into this now, investing heavily into this and hiring sort of every engineer we can find in this area. We signed up to science-based target, scope 1, 2, 3, and for us in scope 3 then, downstream, that is this transition I just talked about, changing from diesel in our vehicles and machines over to zero-emission vehicles then. Upstream, scope 3 then, and here we come to the supply chain then, obviously. And as Ian said, we have, like in Volvo, we are in 190 countries all over the world, and on the supply side we have more than 50,000 tier 1 suppliers. So that, of course, multiplied down through the supply chain is easily coming up to millions of suppliers throughout the supply chain. So it's not easy. We should all be humble for this task. That's for sure. But we are extremely clear with our partners in the supply chain that this is a transition that needs to be done. It needs to be green, and it needs to be socially sustainable, of course. We are not giving up one because of the other on this. And if you're named Volvo, it doesn't matter much, honestly, if something goes wrong throughout the supply chain, even if it's tier 7, 8 something. Because if you're named Volvo as a sort of a famous brand, it's easier to get in the spotlight if you're Volvo than if you're maybe a brand that is not so well known. So if something, even a gram of something is popping up that is not fulfilling human rights or whatever, it's you immediately get into the spotlight if that gram happens to be in a Volvo. So this is key to us, and so we are working very much in partnership throughout the supply chain, addressing from a climate perspective, addressing the biggest emitters in materials, starting with them, and that is steel for us. It's quite a lot of steel in a truck. And that's where we partnered up then with Swedish steel company SSAB on fossil-free steel, first in the world. So that steel is already now in our electric trucks. Yesterday, together with Secretary Kerry from US state government, we signed a contract also on aluminium with Norsk Hydro. So now we do the aluminium stuff as well, or we will do. It's not there yet, but it's coming. That's a bit our challenge where we are. Again, I've been a long time in Volvo, but it's really exciting times, I can say.
Thank you for that. I'm actually going to welcome our a fourth panel member who's you take that seat, Quasi, who's, as they say, better late than never, and fantastic to have you, Quasi, who, of course, is head of metals and mining at Bloomberg New Energy Finance. And Quasi, in fact, you've done quite a lot of study in Australia too, so you probably have a good feel for the Australian resources sector, I'm sure. Great to have you here on the panel. I wonder whether, just to sort of demystify the critical minerals kind of more broadly, just tell us a little bit about, the overarching, the key minerals involved, the kind of supply and demand dynamics, and important things that are sort of happening in today's market, particularly around lithium and other things. It'd be great to get your perspective on that.
Yeah, and thank you, and thanks for having me, and apologies, as you can see, my driver missed the turn, and I ended up getting a tour of Dubai I did not wish for. But yeah, ultimately halfway I had to just get off the car and run here, so I might be panting a little bit. But thank you once again, and it's really great to be here. Especially, I think, I've not been to COP often, but then I'm told that this is probably the first COP where minerals has actually become a center-forward conversation. And I think with minerals comes Australia as well. The role Australia is going to play in the transition has also been amplified given the importance of raw materials. And I think the way I always frame this conversation is that if you look around this room, everything that is not made on the ground is got from the ground. And I think it's important to realize that if you're not getting it from an agricultural source, you're probably getting it from the resource sector. So as optimistic as we are at COP about whether there's going to be more wind turbines, more solar PVs, more batteries, more electrolyzers, all these technologies are underpinned by minerals one way or the other. And I always like to put me to test, and you can ask me any technology, and I'm able to tell you which mineral is this made up of. Anyone? Anyone?
Anyone game enough?
Any technology. I used to work at the University of Queensland, so I like to lecture and engage rather than give a talk. But then if no one is going to put me to test, I'll put myself to test. Wind turbines, you have copper in there, you have permanent magnet in there. You talk about solar PV, you've got silicon in there, and silicon is essentially sand, which some of it is mined in Queensland as well. And then you take your batteries, you have your lithium, which is equally mined in Australia. So that is it, the overview of these metals. But what is the scale? So today, if we look at the amount of metals going into clean energy technologies, on an average, about 50 million tons of these metals go into clean energy, in the production or manufacturing of clean energy technologies. Now, I want you to close your eyes and fast forward into 2050. Assuming that we reach our net zero target and we are able to deploy all these technologies that are going to come online, how much more metals do you think we will need? By 2050, that 50 million quickly ramps up to 254 million metric tons of metals. And this is just the average. If you go a little bit deeper, you realize that copper, for example, would have to double. Supply would have to double. If you take lithium, it would have to grow as much as 14 times the capacity we have today. If you take rare earth, you're looking at about 3 times more capacity. And I think the housefly also wants to be. Okay. And thank you. So you look at the scale of all this, and you realize that indeed there can be no transition without mining, simply because even the animals want to learn about it. But most importantly, all of us have one way or the other to play a role in there. And I think I'll pause here, and then I'll pass it on.
Thank you for that. Just to pick up another kind of angle with critical minerals. Obviously, various countries, most notably the US, has introduced the Inflation Reduction Act, which is, and maybe this is a question for Nick, and I'll get your thoughts after that, Quasi. But are we seeing a change in kind of behaviour as a result of that? Are we seeing people kind of relocating? I mean, obviously the resources are where they are, but just downstream processing and supply chain relationships, are they all changing with that?
Yeah, so the Inflation Reduction Act was obviously a massive piece of legislation a bit over 12 months ago. It's driven predominantly to increase renewables and kind of investment in the US. But there's a great term I like, which is friendshoring, which the US is using, particularly with Australia, around critical minerals. And if you take a step back, you have to recognise that most of the processing capacity for critical minerals is located in China. And there's a big effort by whether it's the EU, US, other countries to onshore some of that processing capacity. That capacity kind of will have to compete at the end of the day from a cost perspective with China. We have to recognise that the existing processing base in China will continue to be the lowest cost processing capacity in the world, just based on the economies of scale they have, but also their relatively cheap input costs around both labour and energy. And so in order for onshoring and friendshoring to actually work, you have to have government subsidies and government-driven policies to help build out that processing capacity. In the Inflation Reduction Act, we're seeing that. They have the 45x production tax credit at 10%, and that production tax credit actually goes to the person who effectively consumes the end product. And Australia will benefit from that by effectively having a effectively lower cost input commodity if they're selling it into the US market. One of the things that people don't realise about the Inflation Reduction Act is there's a lot of detail that wasn't contained in the legislation that's currently being worked through by IRS and Treasury, and that's been happening over the last 12 months. And that is just starting to flow through. And so the real impact of the Inflation Reduction Act in these new sectors or newer sectors hasn't really flowed through, but it should flow through over the next 6, 12, 24 months. We've seen lots of announcements, but we do expect steel in the ground and dollars in the ground to actually start happening in the next 12, 24 months.
Yeah, thank you. Yeah, it's going to be interesting. Just in terms of, that green premium, and something we chatted about yesterday, Quasi, where, if you've got the subsidy like the IRA, some of that may be, you may be able to deal with that. But otherwise, all those sort of difficult issues with the extraction of critical minerals, particularly in cobalt in the DRC, other issues around emissions and water and so modern slavery. What's your feeling about the market's willingness to pay for that, and how are we going to address that if not?
Yeah, I think, I think it's important to realize that the last time the world saw this incredible demand of metals, i.e. during the China growth in China, I like to call that era a supply-driven super cycle. And what we're going to see now is a reverse of that, which is a demand-driven super cycle. And the example I always love to share is that let's rewind back to 1999 or 2000. And let's just say there's a skyscraper that has been built in whether Beijing or Sydney or anywhere. I can't think of anyone that entered a building and went like, I don't think this building was made of green steel, so I'm not going to enter it. And then they go out. it never happened, and I've not seen it happen. But you think about an electric vehicle, there is a consumer somewhere in Norway that cares about the cobalt that was used in the production of the electric vehicle, or where the nickel came from, the emissions profile of that nickel, whether it's in Indonesia or Philippines, and the child labor, modern slavery, like you talked about. So we are dealing with a consumer market that is way more sophisticated than your traditional consumers of metals. So here is how it's going to play out. Take electric vehicle as an example. 3 years ago, Elon Musk was very, very, very firm on the fact that Tesla would never use the LFP chemistry, which is essentially a no cobalt chemistry, because the density or the range of that is very low. Now, on the day they opened their Shanghai factory, for those who followed that day, after he danced on stage, he did a U-turn on his battery chemistry choice and announced that the entry model that will be produced in the Shanghai factory would not use the LFP battery. What changed? Cobalt. Cobalt had become such a contentious metal that companies were willing, for 3 reasons. Prices had risen to about 80,000. Secondly, 2 countries control the whole supply chain. And third, it didn't matter whether you got it from a main producer like Glencore or an artisanal producer, the PR around it was so bad. So companies were either willing to get it from Australia and pay a premium for it or avoid it in total. So I think it's going to be demand-driven, the green premium that you talk about, where the consumers are now going to pick and choose. I like Volvo, I don't like this, because we've had to get their raw materials from there. The second part of the green premium is an example of a partnership Rio Tinto had with Nespresso. So how many of you know that the aluminum foil that is used by Nespresso came from Rio Tinto's green aluminum? And oh, okay, jeez, that's great. Yeah, and that shows an example. So that is actually a market-driven green premium where Nespresso knows the value of this green premium. So they are willing to go to Rio Tinto and say, look, we know it's $1 per ton. For whatever reason, we're going to add an extra 50 cents to be the one that offtakes these things. So I think these are the 2 things that would drive the green premium. The market one, where companies know the market value of it and they are willing to pay minus for that extra product, or the consumer one, where you have that Norwegian couple looking to buy their electric vehicle and they decide on a Volvo and not another company simply because of what they've heard or what they know about their supply chains.
Yeah, that's very interesting. Maybe I'll throw to Nicholas on that. Just how informed and sensitive are your consumers today, and do you expect that to change?
Honestly, in commercial vehicles, business to business, that is, you know, so it's not there is a difference here between consumer products, I think, and business to business. To be perfectly honest with you, we don't see that interest from our customers that we would like to see, because we are into this transition and we're doing it now. Europe and US, we need to do it in 6 years. That's what we're talking about. So it's an enormous challenge. At least every 3rd truck we sell in 6 years from now needs to be fossil free. So, you know, that's quite tough. And it would be great to have all customers shouting for this. Now, please bring this. But who is shouting for it is the customers' customers. They're the big retailers of the world. And so it's driving change, and we see it. And we're already selling thousands of fully electric trucks. So there is a need for it. It will be different thresholds over time here, obviously, because there are always some first movers, you know, that want to show 1 or 2 trucks outside headquarters, and that's not sufficient. Obviously, we need the bigger fleets to start changing, and it's happening. And we can see a difference. I mean, I start by saying that we have this fossil-free steel now into our trucks, and we see our customers and customers' customers actually utilizing that in their own advertising and stuff like that. So the big question is it quick enough? And also comment to the IRA. Also very interesting discussion between Europe and US on this one, because Europe is feeling, Brussels is feeling that we are maybe falling behind in Europe then, this kind of competition. You know, maybe what they don't think too much about is that for big companies like Volvo or our competitors in the commercial vehicles industry, all of us are global. You know, almost all of us are really global companies. So to us, it's rather a matter of timing in this time period of 6 years. Will we go first with our battery cell production in US, or will we do it in Europe? We thought it would be in Europe because of the Green Deal and, you know, all of this. Maybe it will be in US because, you know, but it will be happening in both places, obviously. But you know, it's a question of who's the first one out. Yeah.
And just with that, Nicholas, if you were to make a big decision about an investment in the US to benefit from the Inflation Reduction Act, do you worry about you know, change in US leadership and the repeal of that legislation? Do you think people are concerned about, because that may only be, you know, 2 years away?
Yeah. No. Yeah. Well, concerned, yes, we are about that, but but we sort of hear from many different stakeholders that a change of leadership in US would not change IRA. I don't know if that is true, but of course it's in general. You know, change in politics is a mess, honestly, all over the world. We're worried in Europe as well. You know, we have had a commission now. We have a commission now, European Commission, which has been 100% Green Deal and, you know, fit for 55 or what have you. That commission is going out next year because it's election year next year in Europe. So, and no one knows what the next one will look like. And, you know, put in. Like, God forbid, but it might be, you know, shifting again. So, and why I say this is that it's worrying is that it's also comforting. I think it's valuable to say it in a COP, that the private sector real commitment beyond regulations is maybe actually more stable than politics around the world. So we signed up to, as I said, to science-based target. We will go there. With or without regulation. Now we are forced by regulation, by the way, yes, of course.
Thank you. Yes, a nice segue. I was going to throw to Mary. Mary, you are, a lot of your client base is in the ASX top 100, and you know, we talked a bit about the consumer drive or the pull-through from consumers. In terms of regulation and pending future regulation around IFRS and, you know, TCFDs and all the reporting, financed emissions, do you see regulation driving, putting pressure on companies in this regard around ultimately, you know, the guarantee of origin and critical minerals?
In a very short answer, yes. And that's what companies are starting to get ready for is just how much, as Volvo said, how much do I need to reduce the emissions in my supply chain? How much am I responsible for, and what sort of influence do I have? I think the piece of the conversation that's missing here, though, is the understanding that this is the transition. Critical minerals are being consumed because we don't want to consume fossil fuels. And this is about managing the risk through that transition. And that's what the IFRS, IWSB disclosures are about, is understanding your risk in your supply chain. And I think that just looking at it from the context of how much carbon have I got flowing as a result of my scope 3 minerals probably isn't enough. You've got to be looking at the just transition. If we're going to be extracting more cobalt, more lithium, what are we doing to make sure that the impact on the regions where those materials are being drawn from is managed? Is it just to the people in those areas? Equally, is it just to the people where we're not going to be extracting the petrol and the fossil fuels from? How are we managing the just transition? And it's got to be an issue for you because you're the one who's switching out one for the other. That's the challenge that I don't think we're seeing coming through regulation or even voluntary reporting at the moment, is how are corporates managing the truly just social transition that we're driving through because of these legislative changes.
And when you talk about that, I assume that includes We talk about rare earths and critical minerals in, say, sub-Saharan Africa, impact it may have on a country, the community, and whether or not there's an obligation to make sure that mine gives back in some ways to the community because it's finite. That's something I think that you're concerned about.
It's a deeply ethical problem that I think the mining industry has, which is there's resources in the ground, they have no value in the ground. When you extract them from the ground, they have value. But the country that used to own them no longer owns them. What are you reinvesting in that country to make up for the fact that you have taken away potentially the single only source of finance that country had? And that's what I'm talking about with respect to the social aspects of this just transition. If we're going to extract these raw materials, we have to make good in the areas that we're withdrawing them from. So I've got to love it. Australia without flies just wouldn't be Australia, so we brought some with us.
We brought them in, especially, all the way from Western Victoria. Just changing the topic slightly before we might throw to the floor for some questions. I just want to talk about the recycling of some of these minerals, particularly lithium. The PV panels on Australian rooftops in another 10 years' time will be extraordinary. Quasi, where are we at with recycling? Is obviously still early-ish days, and what kind of might need to be done to improve that?
I think there are a few things. We need to understand first the scale of the recycling opportunity. So on average, I think we do believe that electric vehicles or batteries would be in existence. So let's take the EV market as an example. On average, that battery would be in a car for like 10 years. And on an assumption that it's going to have a 5-year second life on the grid, you're looking at 15 years. And the EV transition or the battery transition actually started somewhere in 2020. So we think 2035 will be the critical point, right, where we're going to see a lot of capacity. So we think if you take a metal like lithium as an example, up to about 15% of global supply could potentially come from recycling. And the key word is cold. I'll come back to that later. About 30% of cobalt supply by 2035 could come from recycling. And then 20% of nickel could come from recycling. And the reason why I use could is that to be able to recycle something, somebody has to first take it to the scrapyard or whatever it is, wherever it is that they're collecting it. And I want to sort of do a quick test here. How many of us have used more than one mobile phone? All right. So now let's keep our hands up. So if you've recycled your previous phone, you can drop your hand. If you've ever recycled a previous phone. So you see, majority of us still have our old phones sitting in our lockers. I mean, I still keep mine. I still have about whatever number of phones I've used, I still keep them because there's so much sentimental value to it. So the reason why I said could is the fact that a lot of us will put our hand, if those cars do not end up at the right places, then of course we would not able, or recycling would not be able to make a dent there. So what would it take for us in 13 years' time to have a lot more hands come down? Two things, policy and the infrastructure to collect them, okay? So if, for example, the Australian government or the EU government decided that the responsibility of recycling a battery that has reached its end of life, it could be the auto company, it could be the battery manufacturer, or it could be the consumer. Let's allocate that responsibility and codify it in policy. So that at least gets us 50% there. But then the other 50% is the collection infrastructure. And there's an interesting rule, or I don't know how to put it, but then if you have a battery in the car, it's easier to take it to a scrapyard or a collection point than a battery itself, because in EU regulation, a battery is considered a toxic material. But once it's in the car, it's just a car. I mean, I don't know what difference that makes, but then without the right collection infrastructure, a lot of us would not be able to actually recycle some of these. So I think moving on, yes, it has a role to play post-2035. Even in China, it might be earlier because they were ahead of the curve than others. But then to really make that a true change, I think that we need the right policies, and then we need the right infrastructure to collect them.
I think that's absolutely right, and I think there'll be increasingly product stewardship programs around the world. We're also seeing, on a positive note, in Australia, a lot of interesting early stage companies that are in the recycling business, be they battery recyclers, the first wave of solar PV recyclers. So there's some very interesting, as I say, innovative tech companies. I'm going to see if anyone out there has some interest. Oh, good to see. We've got some questions from the floor. Why don't we start over here on the left? You might need it. I'll surrender.
Thank you. Thank you to the speakers. Talking about origin of green critical minerals and hearing about commitments to social and environmental sustainability. There's a quite controversial push to open the deep sea, the deep Pacific Ocean, to deep sea mining for some of these minerals. There's also a counter push political movement that's growing on the other side, based around the problems. Just does deep sea mining fit within the sustainability mould from financing to supply to demand? Thank you.
So I think just with everything, it's important for every mining project. So I would rather look at it from a project rather than for every mining project. Before it's approved, obviously you need the financial feasibility. But then for every project in the world, you need an ASIA, an environmental social impact assessment, to guarantee that you do no harm to the communities. That's a social part, but then you do no harm to the environment as well. So I think for now, it's still unclear what the ecological impact of deep sea mining would be in the ocean. And as such, I think that's why there's currently a moratorium on these sort of exploration to try and identify what will be that impact. And I do think that it has to be informed by science, it has to be informed by research, and ultimately that science will lead us to determine whether it is actually, it would have a net zero impact on the environment, or it will probably do more harm than good. But then until then, I do think that because mining has a history, and it's important to acknowledge that there are instances where if you take certain technologies, some companies, or even certain mining practices that look, it was harmless to drop tailings in water because we've extracted all the acidic content and all that. But then we've seen instances where decades later, communities suffer, right? Simply because probably the environmental social impact assessment was not done in a way where we could actually determine the impact. So in simple terms, I don't think there's no good or bad. There's no angel, there's no devil. We're in a transition. Every capacity that we need should come online, but then we should make sure that we don't end up robbing Peter to pay Paul.
Yeah, I can just, from Volvo side, I can chip in on that one. I fully agree.
Thanks.
Fully agree. At this point in time, it's too many question marks around deep sea mining. So from Volvo side, we have chosen actually to, publicly, but more importantly, maybe to our supply chain, actually say that deep sea mining is not in our products at this point in time. Hopefully it can change.
Thank you. We've got a couple more. Anna, and then I'll throw to you.
So the direction of travel you've described, we need 14 times growth in lithium. We're not seeing the market signals that would trigger the construction. What's needed if Australia's got a real resource and opening here? What's it going to take?
For Australia to increase capacity? Money. But that's just one thing. I think obviously the capital investment required to develop these projects. But when we actually talk to industry, I spent quite a considerable amount of time going through company and traveling around Australia, and to the extent that in some instances it actually ended up being a therapy session for the mining industry. And the biggest concern they had was with government regulations, number one, but then also the permitting regime in Australia, okay? as it stands now, if you wanted to develop a new project in Australia, the hoops, the loops that you have to go through just to get that permit sorted, I think it's becoming increasingly challenging. And all the industry need, I think usually when we talk about expedited or a much more structured licensing regime, I think there are people conflicted with, all right, let's expedite it. It's not mutually exclusive. Australia can have a robust licensing or permitting regime that does not compromise on the environment or the social standard, while also making it a very rapid process as well. And as it stands now, we've had instances where a permit would go to a department and it stays there for 24 months, which is unacceptable. And if you look at the Critical Minerals Acts that the EU put in place, they are actually hoping to streamline that. So I think, one, finance; two, the permitting regime; three, technology. And actually, there's an interesting Australia example I always give, that Australia punches above its weight. And sometimes when you look at the critical minerals, when we talk to companies, we're like, oh, Australia shouldn't go refining, they should just ship it to Europe because of cost of economy of scale and competitiveness with China. But it's an interesting example. 5 years ago, if you look at the lithium market, almost all the lithium that was produced in Australia ended up in China as concentrates. By 2025, into the 2030s, majority of the lithium produced in Australia would be converted to hydroxide onshore, simply because of what we call the spodumene to hydroxide direct conversion that a few companies in Western Australia were bold enough to try. So technology and investment in research, I mean, I'm a product of Australian investment in innovation. The CRC, or is where I did my PhD. And I think that it's actually these three things that would put Australia on the global map. Getting that capital sorted, government creating that regime that makes sure that whenever a seed is planted, it grows quickly and no one sits on it. And then looking at where Australia can develop a technological advantage that the world is not using. And the lithium example that I gave today, Chinese companies are scrambling around the world looking for that lithium to replace what Australia used to produce to them, simply because a company took that bold move. And with these three things, the future will be exciting.
Yeah, it is very exciting. There's obviously a lot of capital available in Australia, of course, for particular lithium mining, with people like the Clean Energy Finance Corporation, EFIC, or now EFA, who are of course interested in its export potential, the National Reconstruction Fund in its look with its new $15 billion, of which $3 billion is directed towards clean energy supply chains, and even the Northern Australian Infrastructure Fund. So there's a wealth of federal government agencies with their eyes on the lithium prize, if you like. Okay, just maybe two more. There was a lady here who put her hand up early, and then Anna.
Sorry. Mark Johnson, Australian Aluminium Council. A non-aluminium question though. What role, if any, do you see, going back to the point about the need for circularity in the system, but also the need for a just transition, do you see a role for leasing these minerals in the long term so that you never own them? They just become, well, they may be owned by a company, Volvo may own them and Volvo may get them back, or maybe a country actually owns them and the country gets them back.
I think you're describing nirvana there. Absolutely. I think one of the limits to recycling is always the ability to separate one metal from the other in the end product. So if there's the potential to have input to the design of that end product so it makes the materials accessible, then that type of model would be possible. We have seen some examples more of servicizing than of leasing of products, but yes, it would enhance the recovery and the recycling, definitely. And I've always thought that the driver for that will be things like submarine, deep sea mining, driving the price up to the point that recycling is cheaper. But yes, if we can get there and have a country own its asset and never sell it, but only ever lease it out, that would be great.
Yeah, and I think part of it will just be driven by consumers. At the end of the day, people are buying an electric vehicle because they believe in climate change and the 70,000 people here. And so they want to make sure that ultimately the material that goes into that car gets dealt with appropriately. And so we are starting to see some of the OEMs actually invest in effectively recycling programs up front as part of their kind of investment in the vehicle. And so I do expect that to continue. Whether it goes to a full leasing model, that's to be determined.
Nicholas?
Yeah, a short comment on that. Yeah, we are doing just that. So different leasing models already, because convincing a truck owner to do this transition from diesel to electric is not easy. So it's for nothing else than just business reason we need to do that. We can't ask our customers to take this risk, honestly, in running their business on the battery. But the upside of this is that it's not only taking that kind of responsibility, it's also that we see a huge business opportunity in getting the batteries back. We have 1.5 million, 2 million connected vehicles already out there. So we are following each and every cell, exactly, state of health every day, understanding it. So both to understand when do we need to possibly change the battery for the customer to secure his or her daily business, but also to plan for the second life of the batteries, where we want to make business as well. Because there is a huge second life on a battery used in a truck. Car is a little bit different, but a truck, accelerating a 40 or 60 ton truck, that takes some juice out of that battery. So when that is not available any longer, there is still a lot of charging capacity left in that battery for other applications. So we actually started a business unit called Volvo Energy to just make business out of that second life.
Terrific. Last question from the back, Anna, from the Clean Energy Council.
Only if it's not too late, Ian. You're being very kind. I had a question, and so we might have to have a short budget for the answer. Anna Freeman, Clean Energy Council. We are great at digging and shipping in Australia, but not so. We don't play such a big role anymore. We've seen it decline over time in terms of minerals processing. A quick question, short answers. Should we be playing a much bigger role in minerals processing in Australia, and how can we make that happen?
Yeah, I think it's important to probably provide a context here, and like I said, so follows on my previous point about technology, right? And look, the world is market driven. People will buy cheap products, right? If China produces it at the least cost, the world gravitates towards China. And that is what historically has held back Australia from further moving downstream, because there's a cheaper producer. But there are two things that are changing this market. And number one is policy. And I'll give you an example. For those of you who follow Western Australia's lithium scene, by the way, I'm from West Africa. So for those of you following Western Australia's lithium scene, there had been two important M&A or acquisitions made that was thwarted by Australian billionaires, right? Simply because overnight, if you purchase lithium, if you're a Volvo, if you're a Ford, and you have your electric vehicle manufacturing plant in America, where you purchase your lithium matters. Because if you purchase it in Australia, your consumer is able to access $3,750 purchase subsidy. So overnight, if you're a Ford that was rather getting this nickel in Indonesia, you do the maths, and just by going a little bit further south, or wherever Australia is, and getting the processed raw material, instantly you're able to access $3,750 purchase subsidy. So that changes the cost mass for Australia. And I think we are going to expect, or increasingly we are going to see that trajectory where it's not even the Australian government's subsidies that comes into play to make Australian metals or refining competitive. It's either market, because the products in Australia are good. The second one is really coming down to corporate responsibility. And I can give you another example where companies are beginning to question whether, I'll use Indonesia as an example, it has one of the highest highest CO2 grid intensities in the world. And it's at the same time the largest nickel producer. There are companies that are looking at alternative sources, irrespective of the cost. Because now let's take a car as an example, or even any. In the end, the cost contribution of nickel to the overall cost is very, very small, right? To the point that if they had to pay twice the market price just to be able to get that raw material from a place where the profile is lower, and so they can have those rights to give to their consumer, they would do it. And that is instantly changing the map for Australian companies, okay? So I think, just to summarize quickly, technology would be that space where Australia can compete globally. If the whole world is doing it this way, and they're making it cheaper, with technology, Australia can come up with something new and break it. And the spodumene to hydroxide converter was one of them. The second one is really about getting in line with where the world is going, and an IRA is a booster. And then the third one is the fact that the corporate responsibility of companies to ensure that they get the raw materials from places where, whether there's child labor free or emissions is low and all that, it's also very important, and I think it would be a tailwind.
Mary, last response.
Just very quickly, it's much more efficient to export Australia's sunshine in the form of metal than it is to export it in the form of hydrogen. So from a nation-building perspective, it makes a lot more sense to go that route. And I think at the moment it would require government will, policy, and a bit of cash injection.
Thank you. Thank you for that. We're out of time. That was terrific. If you could put your hands together for my terrific panel. Quasi, Nick, Mary and Nicholas. That, I think, is it for formalities here at the Australian Pavilion. Thank you again, and look forward to seeing you around COP28. Thank you.